Hello students, now it's time for your accounts class. And from your book Double Entry Bookkeeping, we started one chapter, Issue of Shares, and yesterday I discussed with you one topic, Issue of Shares at a Premium. Now my today's topic is Issue of Shares for Consideration Other Than Cash, and pages covered under this 6.24 till 6.31. Now what are the objectives? The main objective of issue of shares knowledge in case in future you deal with shares, debentures, preferentials, deal of sale and purchase of securities. So proper knowledge required, what is the procedure followed in the company, etc. The main objective of the study of issue of share is to give the proper knowledge of shares, share capital, how to prepare the balance sheet to the students. Now the example, see example students. ITC Limited purchased machinery from Ram Bros for rupees 18 lakh payable of issue of fully paid shares of 100 each. So the topic is other than cash. Other than cash means when the company issued shares and not received in consideration rupees cash, only just receive one machinery or any kind asset. So here ITC Limited purchased machinery. ITC Limited is your company who purchased machinery from Ram for rupees 18 lakh. So payable by, now ITC Limited not paid cash for machinery, payable by issue of fully paid shares. So paid with the help of equity shares of rupees 100 each. Clear? So issue of shares rupees 100 each and purchase machinery instead of cash. Issue of shares for consideration other than cash. Now what is the meaning of issue of shares other than cash? A company generally buys the assets for the business for cash or on credit, both cases, on cash or on credit. Also, it usually issues shares for cash also issued, but in some cases, if it may choose to buy the asset in exchange of shares. When company decided to purchase the asset not to receive the cash is considered as issue of shares for consideration other than cash. It may offer the fully paid equity shares to vendors for value of the asset. So for the value of asset issued, company issued equity shares. For example, consideration other than cash. Two ways. Purchase of asset, one way. Second way, purchase of business or services taken from promoters or underwriters. So first case is purchase of asset. Firstly, I am going to discuss with you purchase of asset like plant, machinery. Such share may be issued at, so in both cases, shares issued at par or at premium. Like here see, at par rupees 10, at premium, you know that face value plus premium value. So 10 plus 3 is your premium, total 13. First of all, key terms. Vendor. Who is the vendor? A vendor is a party in the supply that makes goods and services available to the company or consumer. The person who avails the services and goods to the consumers or the company considered as vendor. In simple words, a vendor, also known as the supplier, is a person that sells something. For example, machinery vendor who delivered the machineries to the company. Semi-finished goods vendor. So the person who provides services or also the goods to the company is considered as vendor. Promoter. A corporate promoter is a firm or a person who does the preliminary work for formation of company. For formation of company, any preliminary starting work conducted by any person considered as promoter, including its promotion, incorporation and flotation. Flotation means to sell first time shares in the market, and solicits helps the people to invest money in the company. So who promotes firstly the company is considered as promoter. Now who is the underwriter? In an initial public offering, the underwriters buy securities from the company about to go to public at certain price, and then they subsequently sell the security to the other. In simple words, the underwriter main work to work for the company for buying and selling of security on the behalf of company. Like see, underwriter buys securities from the company. So firstly the underwriter buys the security from the company, and then the next part is to sell the security, same security, to the public at certain price. He is considered as risk taker. Now what is underwriting? Underwriting is the process through which an individual or institute takes on financial risk for fees. So financial risk only taken by the underwriter, and the process is considered as underwriting, and the fees charged by the underwriter. Now the next point is, we are on the point how to show in the balance sheet, how to show the issue of shares other than cash in the balance sheet. So see, first of all, main head share capital, subhead issued capital, under this subscribed capital, and by the way of note as follows. Out of the above equity shares, preference shares of rupees this like 10, 20, 30, 40 paid up have been issued pursuant to an contract of consideration other than cash. You also mentioned with the amount consideration other than cash, and the head share capital, subhead issued capital, under this subscribed capital. Now the main point here, first of all, see again one, consideration other than cash, two ways: purchase of asset or purchase of business. So firstly I am going to discuss with you purchase of asset. Issue of shares for purchase of assets. So on purchase of asset, the entry, journal entry here is sundry assets individually, like assets, any type of asset, plant, machinery, land, stock, etc. Individually debit here, okay, to vendor. Like see here, rule applicable, why sundry assets debited, debit what comes in, all the assets comes in, so that's why sundry assets debited. To vendor, credit the giver, okay, and who gives? The vendor only, na, vendor gives. So in this case, vendor, if vendor gives the name of the vendor. Likewise in this case, see, your vendor here is Ram Bros. Like ITC is your company who issues the shares, and Ram Bros is your vendor. So here sundry assets to Ram account. So entry on purchase of asset, sundry assets individually, each and every asset, to vendor. Now purchase of business. So second case is, this one is for your assets. On purchase of business, purchase consideration. First of all, know about what is purchase consideration. Purchase consideration is the amount paid by the purchasing company in consideration for purchase of assets of another enterprise or purchase of business. Like purchase consideration, when suppose one company, ABC company, purchased business of next person like Ram, 12 lakh, for 12 lakh. So maybe the company half paid by check and half by shares. So the full 12 lakh is considered as purchase consideration. ABC purchase consideration 12 lakh, purchase the business of Ram. So the purchasing company in consideration for purchase of assets of another enterprise or purchase of business, ki when company pays by check or by half by check or full by the issuing of shares, is considered as purchase consideration with the help of formula C. First of all, net asset is equal to asset minus liabilities. This one is your net asset. Case 1. If the purchase consideration is more than the value of net asset, difference is debited to goodwill account. So first of all, see the example. Purchase consideration, one company purchase consideration is 15 lakh and purchase with 15 lakh plant 3,50,000, stock in trade 4,50,000 of that person, sundry creditors along with the assets. The company also purchased the liabilities of that company of business also, sundry creditors 1 lakh and land and building 6 lakh. So first of all, find out the net asset. Net asset formula, assets minus liability. So here assets, number 1 asset plant, number 2 asset stock in trade, number 3 asset land and building. So first of all, 3,50,000, 4,50,000, 6 lakh minus liability. Your liability only one, sundry creditors minus 1 lakh. So total amount here is 13 lakh. Now with you are having one is purchase consideration. The company purchase consideration 15 lakh and net worth, net assets, the value received from the business 13 lakh. So compare purchase consideration 15 lakh and net worth. You undertake the business with the net worth 13 lakh. It means you paid more. 2 lakh you paid more. So here paid more, 15 lakh minus 13 lakh, 2 lakh you paid more. Paid just for goodwill. It means you paid 2 lakh extra. It means it is only for goodwill of that person. You purchase the goodwill of the person and debited to which account? Goodwill account. Second case is if purchase consideration is less than the value of net asset. So if your purchase consideration less, for example, purchase consideration 10 lakh, plant, stock, land and building, bills payable, creditors given. So solution here is, net asset is equal to assets minus liability. So number 1 asset plant, number 2 asset stock, number 3 land and building, bills payable, creditors, your liability. So first of all, 5 lakh, 3 lakh, land and building 7 lakh minus bills payable 1 lakh because liability, creditors also minus 3 lakhs. Total net worth, you purchase the business and you derived value here is 11 lakh after excluding the liabilities. So 11 lakh worth of the business, but your purchase consideration 10 lakh. It means less as compared to net worth you received, net asset you received. 1 lakh benefit here. If 1 lakh benefit here, so see under capital reserve, if your purchase consideration is more than goodwill debited, goodwill account debited. If your purchase consideration less than capital reserve account credited. Clear? Now accounting entries. On purchase of asset, sundry assets to vendor, same. Now on purchase of business, see, on a purchase of business, first of all, debit all the assets, credit all the liabilities individually. Here also plant, land, building, etc. Here creditors, bills payable, etc. Now the main point here is to vendor, the person whose business you purchased. Okay, and if your purchase consideration is more, than goodwill account debited. If your purchase consideration is less, than capital reserve account. So if the purchase consideration more than the net asset, the difference debited to goodwill account, like here. If not, if purchase consideration is less than the net asset, the difference is credited to capital account. The both entries here. On issue of shares, so now you purchase the business, asset settled in the journal entry. Now the next is you not paid the cash, you settle with the help of issue of shares. So number one, when shares are issued to vendor at par value, means rupees, if 10, then face value. On face value you issue the shares to the vendor who received. Vendor debit the receiver, so vendor account debited to share capital. Credit what goes out, share capital. So entry here is vendor account debited to share capital. Second entry, if shares are issued to vendor at a premium means that your face value rupees 10 plus rupees 3 premium, so 13. Vendor's account to share capital, like here 10 rupees share capital, and here that security premiums, the reserve account always credited, so here credited with rupees 3. Both entries. Now formula. Next formula, to compute number of shares to be issued by the company to the vendor. So purchase price divided by issue price of share. For example, Rajat Limited purchased the business. Now what? Rajat Limited purchased the business of Modern Stores. Two parties, one is Rajat, one is Modern Stores, purchase the business of now in this case vendor is your Modern Stores and the Rajat purchased the business of Modern Stores. For 10 lakh payable in fully paid equity shares of rupees 100. And see, this one is your sum number 13. Now I am going to discuss with you page number, I think your book page number 6.113. Rajat Limited purchased the business of Modern Stores of rupees 10 lakh payable in fully paid equity shares of 100 each. Pass the journal entry in the books of Rajat if such issue at par or at premium of 20%. So Rajat purchased the business of Modern Stores. For rupees 10 lakh, so solution, first of all at par. Shares are issued at par. If at par, it means rupees 100. No any extra amount here. At par, face value rupees 100. So purchase consideration here is 10 lakh. Okay. Put the value of purchase consideration here 10 lakh divided by issue price. Issue price here is rupees 100. So divided by 100. Total shares issued 10,000. Your first part answer. Second part, shares are issued at a premium of 20%. So here not at a face value. First of all, find out the premium value. Face value rupees 100, premium 20%. So 20% premium is rupees 20. 100 plus 20 is equal to 120 is selling price here. So purchase consideration 10 lakh divided by, now here selling price is 120, not 100 because of premium. So your answer here is 8,333.333. So 0.33 round off. Number of shares 8,333 and the 0.333 multiply with the selling price 120. So rupees 40 you paid by check, and the total number of shares 8,333 and 40 rupees by check. Homework question C. State the name of the capital which refers to that amount which in the memorandum of association as the share capital of the company. Second, what is the minimum time interval between two consecutive share calls according to table for the Companies Act 2013? Solve the sums 0 till 11 plus related illustration, and also refer the links for more better understanding of the topic. Issue of shares, consideration other than cash. Thank you.